All right. Good morning, everyone. Dan here with tradingology.com in the trading room for August 5th, 2021. Happy Thursday going out to you guys. As usual, we do have Dave joining us from the Strong Market team. So good morning, Dave. How you doing this fine day?
I'm doing great. Your connection is much better today.
Yeah, that was a little sketchy back and forth. I couldn't even do some editing of the video after the fact because I think it recorded so funny. So that's why I wasn't able to post it. So Tom, that one was for you only since he joined it live. I recently did some updates to the video editing and it didn't like me. So I was like, okay, I guess I won't get that one up. So I tried.
No worries. It was a good conversation anyway. Too bad everybody missed it.
Exactly. That's why you never know what's going to happen.
That's right.
We got a couple new things today to share with some work I did with the Strong Market team and expanding the Market Timer Excel indicators. I think you guys will be interested in checking that out. And it is Thursday, so we'll definitely check out what's going on with those new unemployment claims. Welcome, Jeff. Good to see you. He's just getting signed in. Let me pull that guy up. So right now, we had a big shoot up in the Dow, and it's just kind of going sideways since. I do notice it stopped right at that 200 moving average, as well as our SR indicator. Hasn't been able to push above that. Closed up once, but then right back down. So always interesting levels to keep an eye on those. That is a bullish indicator. The way this one is set up for today. We see the bull scorecard is above right now, 10-5. So herding is picking up and bearish herding is waning. So we'll see how that does throughout the day. I have adjusted my SD and STs similar to like Dave likes to look down here. So I'm always testing what looks good, what catches your eye, how you see it with the different ways to expand it. Before I had a line, now I'm going to the bars and I do like it a little bit better. So I like your lead there.
Yeah, I do like that because it gives you kind of an idea if it's positive or negative, and if it's trending higher or lower. The line was just a little bit harder to read, I think, at least for me it was.
Yeah. So it's one of those, the indicator does what you need it to do, just depends on how you like to view things. So indexes today. So right now we're sitting at just about 0.5% up on the Dow, 0.40 on the NDX, and the NASDAQ's about 1/3% up right now. So we'll move those guys and take a look at our calendar. Unemployment claims, they had a 382 forecast, came in at 385. Oh, but wait, don't worry. It's still lower than last week. So the headline is decline for a second week in a row, as usual, as we expect. So we're still close to 400,000 a week unemployment claims filing. But the news for the week so far is the new meme stock. And it's themselves, Robinhood. How do you like that?
Yeah, I know. That's where it kind of all started, dude.
Yeah, exactly.
And now we've got Robinhood. Although, I mean, it went up yesterday. It's been up actually since its IPO pretty good. This morning, though, it was down pretty sharply. I think because they're floating those 97.9 million shares of insiders. So not a good sign if you have trust in if you think the company's going to do really well and you're an insider, why would you sell, right?
Right. Yeah, there's the hourly chart. So yeah all the way to 85 yesterday.
Yeah, what is that? Down 16%? Wow.
Yeah, 10% currently. Let me hover back over.
Down $7, down almost 10% there.
Wow. Let me drop into a day exactly. I like the dailies better for these. But there is so much little data here that there's not much. Yeah, look at that gap down. It's trying to recover, so we'll see.
We'll see. One thing that you were looking at when you were looking at the Dow, we were actually up about 200 points this morning on the Dow Industrial Average, but the spreadsheet was calling for a 200-point advance today.
Yeah, let me open that guy up. There was an interesting, as we always like to watch.
Good morning, Tom. Good morning, Jeff.
We had a price anomaly of 204.
Yep, and we were up 200 points today, so pretty good indication there that we were going higher. I sent you that text in the Slack channel last night. Very disappointed we're not going to get a big sell-off today.
I had a little bear trap again set up. So 2 times in a row within a week or so, we've had 2 bear traps. Interestingly enough, both days had price anomalies in triple digits, and they both bounced up at the open of the next day. So that is holding strong. So that's definitely, we always call those out. Keep your eye on those. that is definitely a great one to keep your eye on. So will this go up? We'll see. We always watch internals, as we know. And that's part of some of the new stuff that some of the work we did just recently is we took the original Market Timer Excel. So I've updated my grids here too that you guys may or may not be interested in. Is I've added in a few lines because Dave initially did a lot of this way back in 2008 and 9 where these algorithms were designed and we had less issues trading. So we're taking a look at, do we need to adjust anything? How's it looking right now? So I've added in a couple bands for the issues trading. So I went to a negative and positive 2000 is still there, but I've added in a 2500 because we have seen some days where it's getting that far. And the way the algorithms, Dave, correct me if I'm wrong, is from the work I did with the strong market folks recently, is around that 80% level. And since we're trading around 3,300, whatever issues, we're looking to increase those bands for 80% to match what the internal scripts are doing over here for that 80 and 20% key levels.
Exactly. Yeah. When in 2008, 2009, when I created that 2000 level, it was based on the number of issues that were trading at that time on the NYSE, which was about 2,500 share issues, different stocks. And if you took 80% of that, it's about 2,000. So we're trying to keep it at that 80%. So it really does raise that band up to about 2,500. And so now a true trend day. So this affects the true trend day, right? Because true trend days back then in 2008, 2009, once it hits that 2,000 level and stays there, that's a good indication of a true trend day. We've seen quite a few days where we've gotten above 2,000, but it kind of slips back down again. But if we take the 80% level and we go to 2,500, now I think that probably would give us a better indication that it is in fact a true trend day based on the number of issues that are trading currently.
Yeah, so we've always had it on the NYSE since that's where it was all created on, and even TOS has created symbols over the years that you guys have known. We've added with just ADD and VOLD for advancing volume, declining volume, all put together. Then these ones. So we've talked about this many times. You guys are familiar with it. What's new is we've come out with, the strong market team has created ones for the NASDAQ. So they don't have symbols yet, but we did the old school way of using the underlying issues for advancing, declining with the Qs and advancing and declining volume. And we now have that along with the same NDX and Qs. The symbols don't matter here. I just put them in for just so I can see it easily. I actually turn the chart off on these ones, that, as you guys know, but just so we know how it's related to. So the bottom is all NASDAQ, the top is all NYSE. Now I can see volume going into both major markets, which was interesting yesterday because there was major movements going on in the NASDAQ, but the volume was pretty much trading around zero the entire day while it was negative declining. So it was one of those somewhat anomalous. Interesting where you have, negative on one side and positive on the other, where the volume and the issues aren't lining up. So you have these major gaps. Today they're back in line. So now these will be added to the strong market portal as soon as the team gets that uploaded, probably by the weekend or so, I'd say, give or take. We're just doing some verifications of all the algorithms recently. So that is what's new that's coming out, is the MTXL NAS. You guys will be able to look at both those if anyone's interested in trading those tech stocks. Helps with that.
Yeah, definitely. That's a great addition to the body of work there with the scripts. Yeah.
And to note too, since we do have the 2,000, 2,500 bands on the NYSE, since there are more issues that we've talked about recently, it is set at 2,500 and 3,000 is where I draw the lines for the NAS. So additional issues. So again, same type of thing going for around that 80% level that we see today. Interestingly enough, when we had a little crossover, that was when the short term, I'll give you guys a quick peek. That's when we had this quick bounce in the NASDAQ. Big drop down. So I'll cut that guy out later. But I just wanted to keep an eye on. But yeah, across the board, we're all positive. 170 now, so it's starting to lose already. So the price anomaly is fading. Yeah.
So, I mean, we started out internally pretty strong. It didn't look like the market was going to actually decline too much today, but we do have one of the interesting things about the spreadsheet that I've been looking at is the MT volatilities remained relatively high, despite the fact that we just kind of been moving sideways. here in the markets, although we made new highs in the S&P 500, we made new highs in the Dow the other day. MT vol is staying in those teens, the 110%, 114, 117. And, the flow jumped up from 86 to was 104 yesterday. So it's very, very odd that we have all of this kind of bullishness going on. We keep getting these bounces off of, the dips. But at the same time, if you look under the hood of the market, there's been a lot of selling going on at these highs. Whether or not it catches on and we start to see some retail investors who have been really strong in this market, since late last year, whether or not they're going to get squeezed by a sharp decline in the market or not is kind of really, we really don't know at this point, but there has been institutional selling. You can see the empty supply and demand number there, -11, that indicates institutional selling. Anything over -10 or below -10 is institutional selling, +10 is institutional buying. And if you go back to the 719 there, you see -18. And on the 22nd, we got -11. We got -11 again. So we've got institutional selling coming in over the last few weeks.
Yeah, that pipeline just full right where it was, looked like it might have been clearing, but it's definitely very choppy again right now. And but yeah, I think that's the biggest thing looking at. This is, geez, how many days is this? 21 trading days of over 100% MT volatility.
Yeah. Internally, there's a lot more selling going on, and you can do. The reason I created the bullish herding and the bearish herding columns is just to kind of get a visual representation of, who is. If there's scroll back up again, so you can kind of see the full picture there on those two columns, but you can see pretty clearly that there's a lot more bearish herding going on than bullish herding at this point. That's another pretty good indication that there's more sellers in the market than the price would indicate. The indexes are holding it pretty well, but a lot of the issues, a lot of the other, the issues that don't affect the indexes that much are going down in price.
And one other update too we should make, which kind of goes long play, didn't even think about it until just now, is let me open up the NASDAQ spreadsheet. Since we have recently added on the Market Timer XL, again, that will be coming soon. There was a variation to the way this was originally created for instead of 21 and 27 day sums that the Dow watches that we keep an eye on over here in that part of the algorithms. We have adjusted the NASDAQ spreadsheet back to 11-day and 21-day sums just because of the nuances of how the NASDAQ is different than the NYSE in that fact. So just calling that out to you guys, that is the change as of August. It is in the download sections there, so you don't have to change anything on your spreadsheets. Just when you download the new one, you will have these new updates for the NASDAQ. And we see no hurting whatsoever in the last couple of days, while we still have had elevated empty volatility on that side as well. So it's taken a little bit longer, hasn't been the 21 days, but tech is going in there, but we see no bearish hurting. So that's kind of an interesting symbol there as we see tech might be rebounding quicker and taking off sooner. I'm waiting for, just high level, we look at it's at 15,000. So it's almost 2 to 1 of the Dow.
Yeah.
That's interesting.
Yep. Yeah, the 11 and 21 day sum basically just kind of tells you, hey, what has the price done over the last 11 days? What's it done over the last 21 days? When you get a big divergence between the two, like it looks like on maybe 719 or maybe 720 in there.
Yeah.
Big divergence there. And so one of those is going to catch up. And so the 11-day caught up with the 21 and they kind of got back together again. When you see those kind of divergences, especially when the buy sell number is kind of low, there's a potential there for a rise in the price. Yeah, when we do our live masterclass, it's coming up pretty soon here, the new high-level mentoring class, doing it live, we're going to go into some more in-depth analysis of the spreadsheet so you can get a really good feel about how it works, putting all the pieces together so that you can, if you're a swing trader, especially if you're a swing trader, it's just absolutely gold.
I did hear from the team that's developing the front end for the registration page there. I believe that's going to be released this afternoon. That's what it's looking like. Worst case scenario, Friday. So latest update on that is coming soon. And the start date we can call out now is August 31st, I believe, is that Tuesday. Let me look at my calendar quick. Yes. So the training will start August 31st. We'll open up the registration before this weekend, I promise. I've got the green light from the team that's running that they will be releasing that to registration to be open. So look for that coming out very shortly. And like Dave said, we'll be diving into it. So lots of things. Any questions, you guys can always get a hold of us at emails, but look for that to be coming soon. I'll put out notes and put out some emails for you guys on that. So good stuff coming there very soon.
I don't know if you saw it in Slack channel, but we've got all this economic stimulus and we've got, job numbers coming in and all this stuff, but the velocity of money is still declining. Never really picked up.
Yeah, it's fallen off a cliff even still, for the last 2 decades, it's been continuing to go down, but it just fell off this cliff and it's not recovering.
Yeah, it fell off during the pandemic, and look at that. They've got the gray line in there now, but it didn't continue. So they don't have the, they're looking at that period as kind of a recession, but boy, it's thin. It's real thin, but the velocity of money never recovered. And you can see in every previous recession where the gray lines are, the velocity of money declined, just in the gray line areas. Yeah. So
they're always down here, down. Everybody's down.
Always down. And so, it's going down again. It really hasn't recovered at all. The velocity of money, for those who aren't quite aware of it, is the amount of money that turns over in the economy. So, for example, if I go to the bakery and I spend $1, that dollar that I give for goods and services to the baker, he takes that dollar, he goes out and buys more materials, flour or whatever, puts some in. And then whatever profit he makes, he keeps it, but he keeps turning over that dollar keeps turning over in order to create higher productivity in the economy. So he goes out and buys more supplies that he needs in order to make more baked goods. Well, that's not happening. So every time you go out and spend $1, the companies that are taking in that dollar from the sale of products and services, they're just kind of sitting on it and they're not reinvesting it in their businesses. And that's why, like from the 1980s all the way up to 1999, which was during the dot-com crash, the economy was actually booming. There was actual economics activity taking place. And then since the dot-com bust, it's really been financial engineering that has driven the stock market, but the actual economy, the real economy that people live in every single day, buying goods and services, and stuff like that, has been declining steadily.
Compare that to way back, look at decades ago where they had minor recessions. We say that now compared to, it probably wasn't minor to them at the time when they lived through, but yeah, the 60s, the 70s, the gas wars that happened around 74, 75. That was the only one I see that actually went slightly up, but then it came back down. Other than that, like you say, yeah, they're always down. And this is where the markets were able to recover themselves because there wasn't the Fed put that started right around 87. Oh, look what happened. Look, so here's 85. So 87 is about there. Interesting how that's the kind of like when it changed. We had the recession in 91, small one, but nope, don't worry. We'll be fine. All the activity happened, as Dave was just talking about. We were actually creating and doing things. Tech was booming. The internet came out, all the things came out that created things. Then all of a sudden we had that went way too far. As you're saying, the dot-com bust wasn't able to recover anymore. And now everyone's getting bigger as well since the 90s. Since everything changed in 87, each recession has been larger. Dot-com, look at this one. And now look at very short in time span compared to this large gray line, but look at how much more expanded it dropped, and we're not recovering like we did before. So this is definitely different than previous ones. How that's going to play out at the end of the day is we're living live. So we'll see how long it takes.
Well, you pointed out something really interesting. I don't want to gloss over it, because if you go back to the beginning, the left side of that chart, you can see how steady that velocity of money was pretty much. In the recession during the 70s was actually pretty strong. The stock market in 73, 74 to 75 and 76 actually declined pretty sharply. but the velocity of money remained pretty stable. And then it wasn't until after the dot-com crash in 2000 where you can see how sharply it started to decline. And then again in 2008, how sharply compared to the 60s and 70s. So, I mean, it was, there was declines there, but not anywhere near the declines that we've seen since 1999 and 2008. And then in 2020, it's just absolutely collapsed.
Yeah, just completely fell apart.
Yeah, so the rate at which it's declining is much, much sharper than it was back in the 60s and 70s. We are way below those levels that held steady. It looks like around that 1.6, 1.8 level back then. It was kind of in a tight range, and we broke through that to the downside. If you're a technical trader, you would say that the velocity of money is going to continue to decline. What happens when we get to that 1.0?
I was just going to say, will they adjust this in the next 5 years? Will we see a 0.5 down here? And when will we see the zero bound of the ratio?
Yeah, and I'm not sure exactly what the 1.0 means, but it means that maybe you spend $1 and the dollar does not move. You spend $1 now, it's like at 1.1 maybe. So
it's basically like a zero bound, right? If you spend, yeah.
So maybe
I can't go below 1.
Goes back into the economy now for every dollar that you spend, instead of where it was back in the 96, 97, 98, 99. Every dollar you spent, $2 went back into the economy to spur growth. Now It's like cents is going in. At least that's the way it looks like, the way I read it. I'm not sure if that's exactly correct or not, but I believe that's kind of the principle.
Well, they must have heard us talking, because look at what the NASDAQ just did. New high, all-time high, 15,160. They got to catch the Dow. NASDAQ's got to catch the Dow. When's it going to invert? That'll be an interesting day. And will it?
That would be crazy. It's kind of like Ethereum taking over Bitcoin.
Exactly.
Whoa.
Always interesting to watch the person's pivot levels. Tapped it. Now it's smashed right through it. Look at the cues.
Wow. It's going up to that next level.
Yep. Good trade exit if anyone's trading that. That's the way I like to use these guys. I don't use them for entries. I use them for exits. So when you get close to that, take the money and run. That's one little insight that we'll be sharing as well. Timing, when to get out, when to get in. Yep, we're positive for the day. Everybody's moving over towards bearish territory. Some long tails on the NYSE side, but not major numbers. So it looks like just retail happening right now. So I don't know if I would trust that at all. If anyone's got a trade on there, grab those profits. And with that, we'll probably get close to wrapping it up, unless you got any final thoughts or words to wisdom. Let me make sure I didn't miss anything I wanted to talk about. Oh, I did have this set up too. Since I've adjusted my charts around, this is in a different spot now. We've been seeing the higher lows on the VIX. Well, as of today, we have just broke. So are we going to go back down to 15 like we've done recently? Yeah, we've had a number of these lines. Let me expand this guy out.
Just move your trend line.
I was going off of the bodies that we've done recently. I didn't have one in here because it was kind of choppy, but there we broke one. Will it do one of these? Will it be a fake out? And then jump right back up? But
we still have a higher low on that VIX, even though we have declined on the VIX today. So we'll see. It's still higher than that that low there. So
yep.
What's weird though is if you go back to even 2011 after the financial crisis, the VIX was down like at 10, which is a normal level when we're making new highs, consistently on the Dow and the S&P 500. But we're still in the teens. We're at 1728, and the S&P just made new highs. So very, very strange. That's not typical. If you go way back.
Yeah, I don't know if I got that on this chart or not. I might. Yeah. We'll squeeze her in.
Yeah, I mean, the normal level when we're making new highs, all-time highs on the S&P 500 is right around that 10 level. And when it gets down to that 10 level, boy, things move really, really slowly. So we're still seeing some volatility here in the 17s, but It's very, very strange, very unusual. Yeah, I think you have to go to a weekly chart probably to get that. Oh no, you got it.
Yeah, here's 2011.
Yeah, see, back after 11, after the financial crisis, we were, we just jumped up, but then we came right back to 10. See, and then there it is in April of 2011. We're back under 10, near 10, not quite there, but between 10 and 15. But I mean, after the financial crisis, within about a year, we came right down. We came right back down to that 10, 15 level. To be at 17 is actually kind of high.
Yeah, taking that all into account of the all-time high here of 90 almost. That was at 08 of the height of it.
Yeah.
We're nowhere near any of that.
No.
Couple little blips. Let's see, when was this one? That's 2015. 2018. Remember those couple days for sure. That's recent history.
Yep.
And then last year. So we almost, that's so close.
Very close, yeah.
So now we're just watching these little ones right now because we're looking at, so you start to look at the big macro view and yeah. Will we get another spike like that again?
We shall see.
We could have been watching that. That's probably the biggest double top in history.
I think 87 was much bigger than that, but they really didn't have, I don't think the VIX was actually, I don't even know if you can get the VIX back then. Yeah, it's pretty good double top right there.
That's what you call the VIX crush. Don't know why that circle is on there. Must have been looking at something at one time back in that time frame. An artifact of the drawings.
Yeah, I think I saw somebody do kind of an extrapolation of 1987, and it went like over 100. I think it was something like 150 or something like that. It was so bad.
Sure. All right. Well, the news of the day is market timer NAS indicators will be up by the weekend. HLM live training will be released for registration soon, starting August 31st.
Nice.
Fantastic weather weekends coming up. We got some rain here on Saturday, but it won't make it to you until next week. So you have yourself an awesome weather weekend, Dave. And Jeff, good to see you. Tom cut out early, so he must be getting some good work done. So thanks for joining, Jeff. Any questions, you know where to find us. And you guys have a great weekend.
Yep, we'll see you on Tuesday.
Take care, Dave.
Bye, guys.